Good morning, good afternoon, good evening, traders, wherever you are in the world. I hope you're all well and I hope you're all enjoying your weekend. Happy Easter to everyone, and I hope you're having an amazing time. Pips of Persia here, coming to you with another weekly market outlook video, preparing you for the trading week of 22nd of April 2019 to 26th of April 2019. Again, as usual, disclaimers. These setups are purely for educational purposes and by no means require any action. Your capital is at risk. Therefore, never risk more than what you're willing to lose. Past profits do not guarantee future results. From the pairs I'll be analyzing, again, take notes, take screenshots, whatever suits you. However, if your analysis, if your own personal analysis disagrees with my analysis, please ignore mine, stick with yours, and that's the best way for you to learn. In my opinion, one of the biggest mistakes you can make when it comes to trading, especially if you're at a stage that you can analyze charts on your own, is you trust someone else's analysis over yours. Okay, always trust your own analysis above anyone else's. Make sure to join my Telegram channel as well. The link will be in the description, or just search Pips of Persia on Telegram and it should come up. I will be sending updates for the currency pairs I'll be covering today on my Telegram. On top of that, if I happen to analyze a pair that is not covered in the video today, I will also be sending information about that pair on my Telegram, so make sure you join it. Without further ado, let's go ahead and get started. Let's have a look at the economical calendar for this week. As we know, tomorrow is still bank holiday, so the markets are likely to be slow on Monday. And not the biggest of kind of obstacles in my opinion, because Mondays is not the best of trading days for me anyway. I like to kind of stay out of the markets on Monday and see how the market reacts to the weekend, reacts to any news that we might have had over the weekend. So this is not the biggest of deals for me. We do have some other bank holidays coming up as well. But I am going to be more or less ignoring those bank holidays completely and just trade normally. I'm not going to be changing kind of anything when it comes to my trade. If my analysis is on point and my risk management's on point, I have absolutely nothing to be worried about. A few of the high impact news that I'm going to look forward to are these statements and conferences for Canadian dollar and the reports for Bank of Japan. So these are some of the stuff that I will definitely be looking forward to. These are some of the stuff that will be giving that currency pair a direction. So I'm going to be making sure my trades are safe before these high impact news, and just make sure I stay on top of the news. With that being said, let's go ahead and get started. Australian dollar against the Canadian dollar on a daily time frame. When you look at AUDCAD, if you remember last week, I marked out this divergence over here. This was kind of the divergence that I marked out, and we expected the bearish decline to start there and then. But instead, the market tried to push up. The market opened up with a massive gap. The gap was closed, however. It tried to push up. It tried to maintain the price above this zone that we have marked up over here, but it didn't manage to do that. If anything, on a daily time frame, we got a lot of long wicks to the upside. We got a shooting star formation right over there. So I am still going to be remaining bearish on this pair. We do still have our divergence in play. This was a 4-hour divergence, if I'm not mistaken. Yeah. We do still have this divergence on our MACD. Okay, very clear divergence. So I am going to be remaining bearish on this pair. Potentially, maybe on a lower time frame, such as a 4-hour or 1 hour, we might get another push up to retest some of these daily highs or H4 closures, somewhere around there, and then the push to the downside to continue then. But in general, I'm going to be remaining bearish on Australian dollar against the Canadian dollar. Canadian dollar versus the Swiss franc. Now, this was a pair that the inverted head and shoulder was mentioned in the last week's video, if I'm not mistaken, or the week before that. So we had this inverted head and shoulder formation worked out very, very well. The market needs to give us another push up to this zone over here for this inverted head and shoulder to be completely satisfied. So the head and shoulder does have some more room to go up. I've kind of done a few different scenarios for CAD CHF. Scenario number one. First, let's look at this kind of triangle zone, formation that CAD CHF is doing right now. Market creating higher highs over there, creating lower lows over here. So the first scenario in my eyes is this. This zone right over here, where the market has reacted to this zone in the past over there, okay? That zone got broken to the upside without giving us any sort of a retest for this zone, okay? So scenario number one, in my eyes, is for the market to kind of come down a little bit, tap off this broken through zone, retest it, and then continue to the upside. Continue to the upside for the first take profit to be at this zone over here, this high zone over here. And if that zone gets broken to the upside as well, that's what I've drawn over here, then we can definitely ride it all the way up to the high of that trend line over there for the sell pressure to come in after that. However, the other scenario that I'll be looking at is this. If we get a push up already to this high zone over here, to the higher zone rather, over there, chances are we'll come to some sort of a divergence on a lower time frame as well, as we are looking like we have already. We will be forming some divergence with the way the market is going. It's not really impulsive movement to the upside. It's kind of choppy. So provided I get a push to that zone over there, and I get one, some sort of a divergence, and two, a very clear bearish candlestick formation, then I'll be going ahead and executing sell signals over there. So two very clear scenarios. The rest is just me keeping an eye on the market and seeing how the market reacted to these two scenarios, basically either taking some buy positions to the upside and then taking some sell positions. You could actually go ahead and do both as well. Let's say the market comes down here to this zone and gives you a bullish reversal signal, you can go ahead and execute some buy positions, and you could have one of your take profits at this zone, okay? Provided the market comes up there and gives you some sort of a divergence and a bearish reversal signal, you can go ahead and exit your buy positions and execute some sell positions. But these sort of setups are purely based on price action, so you would have to be waiting for some sort of a clear candlestick confirmation. Euro versus Australian dollar, identical to what was covered last week. Trend line, this is an 8-hour time frame I'm looking at right now. One touch of the trend line over there. Second touch of the trend line over there, and we are right now at the third touch of the trend line, as well as key fib level being the 71% Fibonacci. So from a technical perspective, this market is likely to go up. This market has some room to go up, okay? You can go ahead and in these cases draw some sort of a counter trend line in place as well. This will be my counter trend line, and you could potentially wait for a break and retest of this counter trend line for the continuation to the upside, okay? If that counter trend line gets broken to the upside, then obviously that gives us more confirmation for a buy position for Euro versus Australian dollar. What would make me kind of lose faith in this buy position is if I get a clear break to the downside of this trend line. Okay, the trend line being this one. Let me make it a little bit easier to see. Yeah, if I get a clear break to the downside and a retest of the trend line, then my attitude for a buy position for Euro AUD will be will change basically. That Euro AUD, as mentioned in the last week's video, is because of the Australian dollar weakness. Euro versus Canadian dollar. On a weekly time frame, when I look at this, we can see that we've actually formed some sort of a reversal signal over here. That's not the best of shooting stars for me to consider this a shooting star. The lower wick is too long for that to be a shooting star. But what I can see from this pair is that the market indeed did try to push up, okay, did try to maintain the price above the trend line over here, okay, but it didn't manage to do so. It did not manage to maintain the price above that trend line. Very, very simple, okay? So with that being said, I am still going to be remaining bearish on this pair as well, especially because our counter trend line over here on the 4-hour time frame has indeed been broken to the downside as well. Okay, we got a fake break to the downside over there. Then we got a more dominant, more clear break to the downside. That was our counter trend line. So what I expect to happen for Euro versus Canadian dollar right now, and the reason why I am so bearish on this pair is this daily head and shoulder formation over there. So the market has a lot of room to go down, a lot, and we are actually watching the market at a very good point as well, because we might be able to catch the entire move to the downside. So expect some sort of a retest of this broken through counter trend line, this counter trend line over there. Expect a pullback to the upside, touch the trend line again, touch this counter trend line again and the sell pressure to come in, then definitely something to keep an eye on. Some of you might already be in some sell positions for EURCAD. Keep it open for now. Euro versus Swiss franc. Again, daily time frame. I believe actually that zone was drawn on a weekly time frame. Yeah. So Euro CHF, I can see on a weekly time frame we have quite a powerful buy pressure coming in over there. Candlesticks getting longer and longer, very kind of strong bullish momentum to the upside. The question is, where is that likely to stop? Where is it likely to reverse? Okay, because this whole momentum to the downside still has some more room to drop. Okay. The zone that I have marked up is this zone over here, okay, where I have some clear indications for a reversal over here. Okay, the market reversed in the past over there, and over here, and over here. Okay, very key sort of reversal area, and that zone has been drawn around. So I'm waiting for the market to come and tap off that zone again for the decline to start around that zone. On a daily time frame, when I look at it, for that zone obviously to be tapped off, we need to be breaking above this zone over here to start with. Okay, it's just a matter of patience to wait and see if we are going to be getting to this zone up here, and if we get a candlestick confirmation when we do. Okay, so that's the zone that I'll be working with. In my opinion, that's a very dominant zone in the market, very important zone in the market. That is what I'm going to be basing my analysis on, a pure zone, just a zone and candlestick patterns. Okay, this whole momentum to the upside is a very kind of strong movement to the upside as well. So it's not the sort of movement that I would like to go ahead and take some sell positions against. However, I do believe by the time we come up here, the market is going to get choppier, and after that we might be forming some sort of like a bearish flag formation over there. Okay, and some divergence to come in play. Provided I get those things, touch of the zone, divergence, candlestick pattern, bearish flag, whatever. Provided I get something like that, then I'm going to go ahead and execute some sell positions for Euro versus Swiss franc. Euro versus New Zealand dollar. Last week, we got taken out of EURNZD due to the New Zealand dollar news, which kind of pushed the market up on EURNZD by about 200 pips. It was ridiculous. It was very quick movement. In a matter of seconds, the market moved by that much. No worries though, because what that news did is it actually tapped off a previous reversal zone over there. Let me zoom in. A previous reversal zone right over there was tapped off thanks to the news. Okay. On top of that, the news also made the market react to the key fib level, 61.8 to 71% of this entire move down. Okay, this entire move down, we can see the fib retracement, 71%, as well as that previous reversal zone over there. So with that being said, I am going to be remaining bearish on this pair. I will be remaining bearish on this pair. I do see some divergence still in action over there. Market going up, our indicator going down. So my attitude about this pair is still going to be a very clear bearish momentum. In my opinion, this is still a bearish market. So it's just a matter of being able to find some good entry points and taking some sell positions. Again, in these cases, what you can do is perhaps on a lower time frame, especially if you want to take some intraday trades on this, you can drop down, you can draw some sort of a counter trend line for yourself and wait for a break and retest of said counter trend line and take some trades based on that. Euro versus US dollar. On a weekly time frame, last week this market was a little bit confusing for me because I was very bearish on Euro USD just in general because of all of the weekly closures, as in on a longer term time frame, not an intraday. Because I've got a weekly shooting star over there, 3-pin formation over there. However, last week after that closure, not the trading week that just passed, the one before that, after this closure, we got a morning star formation right over there. We got a bullish 3-pin formation. Okay. that's why I didn't cover it in the video, because I don't actually believe that this 3-pin formation is going to be very dominant, especially because I have a bearish engulfing over here. I have a shooting star over here. I have an evening star formation over there. And with last week's closure, I've actually gotten a weekly tweezer top formation. Okay, so in my opinion, this is a bearish market. Weekly tweezer top right over there. Okay. In my opinion, this is still going to be a bearish market. We've actually reacted to the top of this trend line as well. Still has room to go down. The counter trend line that I have drawn over here has been broken to the downside as well. So all I'm expecting to happen is for me to get some sort of a pullback to the upside, to retest the counter trend line, and the continuation to the downside to start. I'm going to be having my Fibonacci in place over there as well. Okay. Now I can wait and see. The market might react to the 61.8 instead of reacting to let's say a little bit higher for the counter trend line, or just in general. Basically, to summarize it, I will be looking at some zone around there for reaction to the fib level and a reaction to the broken through counter trend line for me to go ahead and take some sell positions for EURUSD around there. So definitely something to keep an eye on. It will be a very nice intraday / short swing trade. Definitely can ride it for about 100 pips, so keep an eye on this move. Final note on EURUSD, this was kind of in general a bearish flag formation over there that finally got broken to the downside. So that's kind of what we're waiting for right now. Pound Australian we've been covering this for about what, 3 weeks now. Finally the market came to the zone that we wanted it to. What was that zone? On a daily time frame, when we looked at the market, we were looking at this trend line over there. One touch at the high over there, second touch over there, third touch, break, and a retest of the trend line. Okay, at the retest of the trend line, the market has actually reacted to the 71% Fibonacci as well. So we are at a very kind of key level for Pound Australian. Fibonacci retest of the trend line, and what I can see on a 4-hour time frame, we've actually formed a mother buying sidebar formation, a harami pattern formation. Okay, so this is my mother bar. I'm not going to kind of break it in detail exactly what a mother bar and sidebar formation is. That's why we have the candlestick trading Bible. But this is my mother bar. I've marked the high and the low of the mother bar, and all of these candlesticks is my inside bar. Provided I get a break above the high of the mother bar, then I can go ahead and take some buy positions on GBPAUD. Now, I do have this counter trend line coming down as well. So if I do get a break above the mother bar, okay, it would be a break above this counter trend line as well. So it could be a very, very nice buy position. It depends on where we close for that mother buying sidebar. So definitely something to keep an eye on. Pound Swiss franc. We are looking to form a head and shoulder formation on a 4-hour time frame. Left shoulder has already been formed, head has already been formed. Right shoulder, it could be formed already, but what I would really like to see for the right shoulder is for the market to come and tap off the key fib level, being the 61.8. That would be brilliant to see for this currency pair, because not only I would have my key fib level, I would also have my head and shoulder as well. That's a very good confirmation for a sell. So scenarios. Number one, either wait for the key fib level 61 to 71, somewhere around there, to be tapped off. Provided you get a candlestick confirmation, go ahead and take your sells there. Or, again, counter trend line that I have drawn over here. Wait for a break and retest below the counter trend line and take some trades based on that. Okay, looks very promising to me. The whole structure of the market and Fibonacci, I really like this. This is a sort of setup that has appeared before on pounds CHF. I was looking at it, if I'm not mistaken. It's a sort of setup that appears a lot in Forex, and if you can identify this kind of head and shoulder alongside of your fib level, then it will be a very ideal setup to execute based on. Pound yen, still going based on the tap off of the Fibonacci 61.8, as well as this double top formation over there. Okay, this kind of resistance area, where this is what I have over here and over there. Okay, just going based on this double / triple top formation as well as the key fib level. We've actually broken below this trend line, this counter trend line again over here. One touch, second touch, didn't really get a third touch, but we finally broke through it. So if I get a clear retracement to retest this kind of broken through trend line, Then I will be executing some further sales, potentially even down to the -27, or a little bit, maybe even further than that. But for now, it would be a nice about 200 to 300 pip move to the downside for pound yen, provided we get a retest of this broken through trend line. Not the favorite setup that I have for this week, but I will be coming back to it on Tuesday and Wednesday, especially because if I'm not mistaken, it was Thursday that we have some high impact Japanese yen news. Pound New Zealand, nothing has changed since the kind of the setup that was shared for the last couple of weeks, because Pound New Zealand is a setup that is going to take a little bit longer than other pairs. Again, just waiting for a tap off of the 71% Fibonacci, that previous reversal zone. This is a daily time frame that I'm looking at. 71% Fibonacci, the previous reversal zone over there, and a daily trend line coming down over there. So that's still what I am kind of waiting for on the daily time frame. But for that to happen, what I would need to see is a clear break above this 4-hour zone that I have marked up. Clear kind of break and retest of this zone for the final push to the upside to form. It's just a patience game right now. Same with pound Australian and pound Canadian, that it took about 2 to 3 weeks for it to come to the zone that we were expecting. Same with this one, it could take longer, but when it does, potentially it will be a very nice trade to take. Finally, gold. So after kind of this major move down was caught, I hope you guys caught this move down anyway. Now the question is, where is gold is likely to go? What I can see currently for gold is this zone, where this was our final take profit for this move to the downside, if you remember. This was all mentioned on my Telegram as well, by the way. What I can see right now is that zone finally got broken to the downside, okay? So my first further sell zone would be at a retest of this broken through zone, okay? So we broke below it, waiting for a retest of the zone for the further sell pressure to come in. That would be the very, very first thing that I'll be looking at for a potential sell position, okay? Provided we end up closing above that zone and looking like the market is going to give us another push up, then the analysis changes and I'll be updating the Telegram on it. But as of now, as of right now, the very, very first thing that I have in mind for gold is just a retest of that zone for the continuation to the downside. If the bullish move to the upside looks like it is strong and it is likely to continue, then I'll send an update for it on my Telegram. But as of now, that's kind of the only thing that I have in mind. That's majority of the pairs that I'll be focusing on for this week. Again, as said, if I analyze something new or if my attitude changes about anything, I'll be forwarding that on my Telegram channel. So make sure you guys are part of the Telegram channel. I'll leave the link in the description below. Bank holiday on Monday, so I'm not going to be on the charts too much. Tuesday potentially will be the first trading day for this week. Always remember to wait for price action before you execute any trades. Don't kind of just jump in because it's at 61.8 or because it touched the trend line. No, you have to be waiting for your price actions. If you guys have any questions, please do not hesitate to contact me on my social media, on Instagram at PipsOfPersia. Again, I'll leave the link in the description as well. Let me know what you guys think of the analysis. If you agree, if you disagree, please let me know in the comment section below. It would be great to hear out some of your thoughts about the pairs I have analyzed. Have an amazing trading week. Make sure to stick to your trading plan. Make sure to stick to your correct risk management. And let's have a great week. Let's catch some pips.